I am primarily a long swing trader. I am not a day trader, and shorting is only maybe 20% on my trading, and I mostly short large cap stocks and ETFs. I rarely trade these micro cap stocks, and when I do, I do it on these kinds of scenarios I just show you guys. These kind of extreme scenarios. But anyways, my equity went sideways from about September to December. This is obviously not a great time to swing trade when an index looks like this. There were stocks going up, but most of them, there were a lot of failed breakouts, etc., etc. And back in late December, the Russell 2000 index was at the same level we saw in early mid 2015. So the index was at the same level it was 3.5 years previous. So that's when I tweeted this. On December 24th, I tweeted, "Merry Christmas to all. Twitter, all doom and gloom. Mnuchin this, Trump that. Who cares? 20% declines are a statistical event occurring every 3 to 4 years on average. Not every 3 to 4 years, but on average if you look back the past 100 years. This is good action setting up for some great long side opportunities eventually where the real money is." And that's exactly what happened. And now I'm going to show you some big screenshots. I'm not doing this to brag, but I'm going to show you what is possible in the market. Because remember, guys, I was pretty much broke just 5-6 years ago. I traded with borrowed money, but I learned what works and what didn't work. I have a few bread and butter setups that I trade over and over again. And, anyone can do this. Change your financial situation. So I'm gonna show you what is possible. So with those tweets in mind, I was ready for a next leg up, and I was right. I just followed the price. Some things just got so extended to the downside. So when it started turning higher with the market bounce here late December. I started building my long portfolio. I was pretty much all in cash. I may have had some long positions that held up well, and I was at some short positions, but I didn't have big exposure at all. And this late December, early January, mid-January, etc., I started building my portfolio up as the setups developed. Stocks started breaking out of good, nice consolidations. Risk-on stocks like growth stocks with earnings started have some good moves. They broke out of nice consolidations, nice flag patterns. And this screenshot is from January 31st. This is what my portfolio looked like. On February 22nd, a lot of the positions are same, a lot of are new. I sold some into new other ones, and just because when you have a bull run, sectors rotate. You have one sector breaking out, then it pulls back or goes sideways. Then you have another sector breaking out. That's how bull markets work, or bull runs, I would say. And from late December to late February, there was a 2-month bull run. It was very profitable for me, for my style of swing trading. Again, this is not to brag, but it is to show what is possible if you really learn the rules of the market. If you really learn, just go back, look at indices for the past 100 years. Like look at the Dow Jones, the DJIA. There's data on that index from like early 1900s. Look at the S&P 500. I think that index is from the 60s or something. Just look at it. The best long opportunities happen after 10, 15, 20% declines. Now, yes, sometimes these 10, 15, 20% declines can turn into 30 or 40 or even 50% declines. But, 50% declines, it's only happened twice the past 100 years. And 40% declines also maybe only a few times. And even 30% declines are very, very rare, maybe once in every 10, 15 years. And yeah, this bounce could have easily failed. It could have failed here, and we could have another leg down. It could have turned. It was this is Russell 2000. It was a 27% or 28% decline. It could have easily become 35, 40. I don't know. I just followed the price. I started seeing breakout stocks having some nice tight setups that broke out of, and I just built my portfolio up. And then late February, things started stalling, started breaking down. I started seeing some failed breakouts, and So I sized down. I got stopped out of a lot of positions, and I just sold down. I during these like 4 or 5 sessions, I decreased my long exposure by about 50%. I added some shorts. I shorted TNA, which is the Russell Triple ETF. I shorted TQQ. This one I covered. So just to hedge some of my long positions. I think we're gonna go sideways for a few weeks or a few months and probably have another leg higher. I don't know, or maybe not. I don't know. I just let the price action dictate. So yeah, we'll see what happens. I hope this video was helpful for you guys. I hope I help you learned something from it.